Hey guys, welcome to Trades Talk. I got an exciting guest in the studio today, coming all the way from Florida onto Trades Talk. Austyn Roth, welcome to the show, man.
Awesome. Thank you for having me.
All right, guys. Well, most of you probably know Austyn's story or have heard of him. Today, we're going to unpack that story a little bit and talk about where he's going next, too. So, Austyn, why don't you take us back to the very beginning when you started mowing lawns?
Yeah, so it all started with wanting to make a little bit of cash when I was in probably middle school, I would say. So I was 10 or 11, wanted to make some money. So I decided, what's the easiest way besides having a lemonade stand on the corner? What can make me some money a little quicker and more long-term revenue? So I started cutting grass, started with a push mower, with my neighbors, knocking on doors, just like I said, trying to make some money. So the first couple years, it was all about, can I buy a better lawnmower? Can I upgrade it to a 52 inch? Can I get a Skag? Can I get an X Mark? It was just kind of, you know, investing in the business. So a lot of YouTube videos, following a lot of creators. And, back then it was a bunch of YouTubers. Just, I think that's when the lawn care community was just starting to get out there. And it was an exciting time. But so I was 11 or 12, kept growing. It kind of pivoted into, I got into some more landscape jobs. We did some installation. And then eventually I kind of capped out. There was no more work to be done in my neighborhood, I felt like. So I bought a golf cart. And that was a kind of a breakthrough moment because I was able to expand where I serviced.
Was this at the time, was this just you or did you have other people working for you?
At this time, I would say it was just me, maybe a couple friends on the side if I needed some help. But for the most part, it was just me. I don't think there was too many friends that I had that were actually serious workers.
Well, it's probably, I mean, you're what, 14, 15 at this point when you bought that golf
Yeah.
cart?
Yeah. So I bought the golf cart. I was 14. I got my dad to give me a loan to buy it. I think it was $10,000 or so. And
Wow.
he gave me a loan at 10% interest. And I think I had to pay $1,000 a month. And I had to get A's and B's in school.
Wow. Nice. Good job, Dad.
So, so yeah, he made me learn the value of money and the value of borrowing money pretty early on as well. As he said, there's no family discounts. So that's how I learned the interest in all that.
That's amazing. Do you remember how much you were charging to mow like a front yard back then?
I would say back then I was probably $80 to $100 a month. And in Florida, like in the summertime, we're doing 4 or 5 cuts, and in the wintertime, we're doing 2 cuts. So it's pretty much 38 cuts a year, amortized out over 12 months. So we were between $80 and $100 a month. So, and I think I had about 15 houses before I needed help. I was able to get 15 done on a Saturday and Sunday.
I was going to ask, so are you doing this on the weekends or after school, or how are you handling it when you're back in school?
Yeah, it's funny thinking back. I think I would do, 3 or 4 after school. I'd have a couple on the weekends, just kind of depended on if I sold any extra work.
Yeah.
Obviously getting out of school, middle school gets out at 4 o'clock here. So didn't leave me much time in the afternoons.
That's amazing. But when you think back to that, where was the drive coming from and the hunger? Was it just strictly I want to be financially stable at 14, 15 years old and make my own money? Or was there something else that you were getting out of it when you were going to work every day?
I chased the money for a little bit, right? It was like every new customer was another $100 a month. How big can I get this? Like we're at 1,000, now we're at 2,000, 3,000. Like how big can we get it? So I was kind of chasing, I think, the customers, and I was like, well, I can hire people eventually, and we'll keep increasing the revenue. But then also when I financed the golf cart, or the side by side, like I had a payment, I had to make it, and
Yeah.
so that was kind of part of the drive. Like I couldn't give up. Like I had $1,000 a month payment. It might have been 2,000. I don't remember. But I know my dad wanted me to suffer, so it was some crazy payment I had to make. And it kept me going, you know. And then eventually it was like, okay, now how can I do more lawns in a day? Like I only have so much time. And
Right.
that's when I went and bought a 52-inch lawnmower, and I bought a brand new one. And I was like, hey, Dad, can you co-sign on this? Like, I need some help on this one. And he was like, okay, well, you've got the revenue, you know, you've got 12 months to pay it off. And, you know, so I think I just kept building up the debt, you know, and had all these payments that I had to make. So I couldn't just turn back.
Wow. I think a lot of people don't take on debt, even as they get older and they build a business. They're so afraid of risk that they don't want to take debt on. They're like, I'm not going to grow my business using debt. But you know, I agree with you. Using debt is actually a great tool to push yourself to do more and push yourself to get to the next level. Like when you bought that 52-inch mower, what did you do the next few months to get more clients? You started expanding. Were you just door knocking? How are you getting more work?
Yeah, I mean, I would say, you know, I had a really good marketing guy that did my website. We did a lot of organic SEO. And I think back then SEO was a lot easier than it is nowadays. It's way more
Yeah.
competitive now. You know, I mean, 10 years ago, it was like, hey, if you had a website and you did a little bit of SEO, you were on Google, you know, and you had some reviews. Like it was much easier back then than it is today. But really just, you know, the problem with doing the marketing that way is I was getting calls from all over and I still only had a golf cart. So it was like, what's your address? Oh, no, sorry, the schedule's full. We can't service that area, you know, or it was turning business away. So eventually I was like, okay, I need a truck. But the problem is I was only 15. I couldn't drive.
Yeah.
So uh, I ended up finding a truck. I bought a truck when I was 15 and I hired a driver. I found an employee that he worked 410s for another landscape company and they would only work them 40 hours. So I was like, perfect. You could work for me on Fridays. And then Friday became Saturday. And then Saturday, we ended up filling Sunday. So now, you know, this guy just wanted to make money. And I was like, that's perfect because I can just do sales and he can produce the work. And so that helped me expand my radius when, you know, I was able to buy the truck and now the opportunities were endless. We could go anywhere.
Wow. So you called this Lucky Landscaping. Where'd you come up with the name?
I think it was just a nickname that I got when I was 8 or 9, and I was like, all right, let's make it Lucky Landscaping and see what happens.
It definitely caught on. And then when did you start? Did you wrap the truck immediately when you bought it, or when did you start doing your graphics that you're known for those amazing
Yeah,
trucks?
I'd say probably when I was like 16 or 17 is when we really did the big branding on the first Isuzu truck that I bought, and the rest was history after that because once I did one, like we had to keep everything the same. So but yeah, we were really big on branding and brand recognition in the local market, which, you know, I think when you're young, like it's me against myself when I go and meet people, and it's like the best thing you can do is build instant credibility. So how are you going to do that? Well, oh, do you know, I'm sure you see my trucks, or hey, where do you live? Oh yeah, we do the community next door, you know. So it was all about credibility to me. And, you know, I don't know how many calls we got from the actual, you know, wraps on the truck because I don't, you know, at the end, our ideal client profile wasn't exactly who sees our truck on the road, but it was more brand recognition.
Well, yeah, I think you had something there. Being young, you have to find a way to gain trust when you walk onto a client's property. So having well branded trucks at least gives you that recognition and that credibility right off the bat.
Yeah, exactly.
So you're 16, you're growing this thing. What's this idea in your head around risk versus reward? You're taking on loans, you're buying more trucks, you're at this point, are you hiring more people beyond that one driver when you're 16?
Yeah, so eventually the time came and it was like hey, I need you to be here 4 days a week and then find another job for those 3 days. Cause I had them busy 3 days. I was like, I'll take the fourth day too. So eventually I say, hey, can you replace your full time job with me? And so we did that. And then, his 4 days became five. And then eventually it became a second employee. But it was great, right? I hated school and I thought school was a waste of time. But at the same time, it also it also trained me to, hey, you can't do the work if you want to grow the business. You have to work on doing the sales and then have your team do the work. And that's what, like, hey, I only had, in high school, 3 or 4 hours after school, I had to do sales, and then I had to keep the guys busy. Like, we only had, 2 or 3 days a week worth of maintenance, and the rest were enhancements. So, like, I have to keep, it's a machine, you have to keep it fed. And I was constantly just selling the work, and school helped me because that, half the day was already in school. So I could never physically do work.
Yeah, you had like a major disadvantage, but it actually worked in your favor to build a business that would run without you for at least 8 hours a day because you're at school.
Yeah.
That's amazing. I think most business owners when they first start, they don't have that thing they can't be there for. So they have to do the work and sell the work, and they never really let go of doing the work. So do you think part of your ability to scale Lucky's was the fact that you weren't fully connected? Like you didn't have to be there every day, all day for the operations?
Yeah, I think 100%. Because for the longest time, I was always just, selling work. And then it became when you start hiring salespeople or an office person or any management hire, right? You have to train them as well. So when I graduated school or when I graduated high school, I think we were doing probably like $1 million a year in revenue, I would say, with probably six or eight employees.
Okay.
And it was like we were at a point to where how am I going to grow it now? Like, can I replace my position? I'm always trying to fill my job. Like, if somebody can take my job, I can focus on something else. So, I graduated school. I think we got an account manager at that time. I was training them, and my time's always been busy with the business side. I think landscaping is just a byproduct of what we do, and and the business though of how it runs, how you take care of your employees is actually what we do.
Right. It's just landscaping happens to be the thing we do to get paid, but your focus was more about culture, taking care of the employees, building a company that is ultimately scalable beyond just yourself. Where did this where did this come from? This awareness around business acumen and how to grow a business, not just grow a landscape service company, if you know what I mean. Like you were figuring out the
Yeah.
business back ends at a young age.
Yeah, I mean, I think, you know, it was just a lot of networking with professionals, um, going to a lot of industry events. Later on, I had joined a peer group, but really just getting around the right people, talking to them. How do they do it? What would be the next hire? And I always looked at it as like, people look at it as that employee cost me $100,000. I look at it as, you know, if they don't last 3 months, they didn't cost me 100,000. They cost me 25,000. So like, and they could dictate whatever they want to be paid because at the end of the day, if they're not good or they're not carrying their weight, they're not going to be a part of the team long term. So an actual employee doesn't cost you what you think they do because every employee should carry their own weight. And I just always looked at it as like, you know, I would have lost that money if I went to college. So, most mistakes in business are cheaper than what my college would have costed me.
I love the mindset. Well, a lot of people, you're pointing out something that's really important, which I think most of us are taught that we have to be so perfect in business. And if you make a mistake, it's going to cost you millions of dollars. And so people are so afraid to make the next move because they're so afraid of losing money. But you were at a place where you graduated, you already had $1 million of revenue coming in, and you didn't have the college, debt that was hanging over your head. But you had this idea that if I wasn't running a company, I'd be paying to go to college. So you were able, it sounds like, to almost justify some pretty risky moves at a young age where your average entrepreneur is trying to just like pinch every penny to be careful they don't go out of business.
Yeah, exactly.
Yeah, it's I love this. So when you're 19 going into 20, how are you growing the business? Do you have a salesperson that's working for you? You still in charge of sales? What's kind of that organic revenue engine that you've put in place at that point?
Yeah, I mean, I think it was, we grew into being a predominantly commercial maintenance company. And I think with that, we really focused on route density. So when we would pick up a customer, we were targeting all four sides of it, and it was instant credibility. It was like, hey, we do the property next door to you. Like, they had, you obviously, if it was a mess, all the neighbors knew about it. You can see that we've cleaned up the mess. Now we're doing way better. Are you interested? And, we did a lot of that. And a lot of our, customer, most of our portfolio was, we didn't just have one customer way out west. If we had customers way out west, we had 2 or 3 decent sized customers, and we were really targeted on like building route optimization, but it was just so much easier to make a sale when a customer knew about you, and they looked at it as an advantage. In commercial maintenance, it was like, hey, we're next door. If you have a problem, like we're in this little area way more than anybody else would be. And I think we ended up selling $4 or $5 million worth of work within a 10-mile radius.
Wow.
Maybe so even probably a 5-mile radius. Like it was tight, and it was only 15 customers, I'd say.
That's amazing. So you have a great, and I've been in the area of West Palm and Jupiter. It's an amazing place with a lot of, large high end condos and HOAs. Were you doing primarily, multi-living places like that? Or were you also doing Class A commercial or hospitals or hotels, things like that too?
Yeah, our specialty really was the Class A properties. We didn't do much multifamily. I think we did 1 or 2 that, they had the same core values as us. Like they wanted their places to look good. They wanted to create a good environment, a good lifestyle for the residences, and they were always enhancing the property. And it's not that we wanted to be picky. It's that when we trained our team members, we were training them to one standard. And, if you're training them to do a Class A property and you send them to a Class C property, if your business developers are bidding a Class C property with a Class C price and you send the team that knows how to do a Class A property, you're going to lose your ass on it. But
yeah.
On the flip side, if you send the Class C team to the Class A property, you're never going to do a good job that meets the customer's, expectations. So I think you really have to focus on one type of, level of service and level of detail, and then just focus on it. You don't want to, and at the same time, we didn't want to be seen on that property and have it, hurt us if we were trying to go after a higher end property.
That makes total sense. Yeah, because your model of selling to the neighbors, if you get Class C, you're just going to get more Class C.
Exactly.
You're just going to be that Class C player. If you get Class A with your strategy, you're just going to get more Class A.
It's like if I can't use you as a reference, you don't fit in our portfolio. We have to be able to use you as a reference. Otherwise, we're just cutting grass at that point.
So what would you say to other landscapers listening to this who have a huge challenge saying no to opportunities? You were able to say no to things that didn't fit your ideal customer profile. I think it's a hard thing for most companies. What would you say to those people that are running the company having a hard time saying no?
Yeah, I mean, I think, if you're always chasing money, right, you're always going to chase it. And if you actually chase doing doing something you like we loved going into properties, beautifying them, making them look better, and we needed the customer to share the same vision with us. And there might have been Class C properties that wanted to do a full revamp, and we were able to get them to look, and they were planning to do a major renovation, and maybe we were a part of that, and we did some of that, but they shared the same vision as us. And it's just important to grow the business. And it's not just the money part or the customer part, it's the employee part. The employees like going to a place where they can take pride in the work that they do. You can make a ton of money doing Class C, type work. Like there's money in every aspect of it. You just have to figure out what you want to specialize in and focus on it.
Yeah, just commit to it and watch it start to grow. So what's your playbook? You get onto a property, you just landed a Class A property, it's been let go a little bit, doesn't look great. What's that first 30 days look like for you when you were growing and you went in and just made that that amazing first impression that allowed you to then go and sell to all the neighbors? What's like the first 30 days look like?
Yeah, I mean, I think really the first 30 days, right? Like we move super quick. We're super nimble. We can send labor in there. We're not overly worried about margins when we know we have a new customer and we see the potential in the area. We see their neighbors are like struggling just as much. And, most of the time the other company's playbook is the exact same. So if you go in and a corporate company has the one account, they probably have one of the 4 properties bordering this one. So, if they lose one, the neighbors instantly like, oh, they just got fired there. And then they somehow start noticing more problems with that vendor because somebody else fired them. So I think coming in, moving quick, getting the property up to speed as quick as possible is what they want to see, right? Like people want to see impact. Why is Lucky so much better than who we had before? Like you can't take 6 months to get something up to par because you're trying to meet labor hours on a job. Like you got to just put the work in, make them happy, and figure out how you can market it then and hopefully get more business off of your method and your playbook. But, developing that 30, 60, 90-day plan with customer startups, having the meetings with them, involving the production manager, involving, a crew leader, like, hey, this is why they hired us. I think oftentimes business development teams don't share the problems that the customers had previously. And it's like, if you don't know that, how are we going to solve it? Like, 90% of the time we're not going in there just to maintain what they had before. Like they want to see change, and we were never the budget friendly option. So like pricing, we're not here to do a less than par job than what they had before. So we got to do better.
I love that. Well, it's you made some really great points. Number one, don't focus so much on labor hours in that first 90 days. It's like get it up to quote. And I would say too, we've noticed when we do that and we overinvest in the front end, it actually makes our labor hour allocation a lot easier to hit in months 4 through 40, right? We want to have these properties for a long time. And you said that business developers too, like for the sales teams listening to this, if you land a property because of a major issue that the previous company was doing and you don't tell your new crew that, then you're almost destined to repeat the same failure and lose that property in the first 2 or 3 years. Yeah,
exactly. I think that customers want to see change, and you have to do better quick.
Yeah. Yeah. So let's kind of fast forward a little bit here. You're building the business. It's going really good. You decide, from what I understand, to make an expansion. Did you expand into Naples, buy a company in Naples? How'd you get over to the other side of the state?
Yeah, so we expanded to the west coast of Florida, Naples, by acquisition. So we purchased a company over there. It was about a $4 or $5 million a year company, a little heavy on install type construction work. and I think about 40 or 50 employees at the time we did the acquisition. So we did an acquisition into Naples, and really just trying to bring the same level of service that we did in Jupiter, similar clientele, similar market, over to the West Coast with, the right partner.
Yeah. And for those who don't know Florida very well, can we say Naples and West Palm area are similar demographic as far as the service and the type of work you guys are doing?
Yeah, I would say very similar, like the whole profile of the probably income types, the residences, the HOA type communities, like is very similar.
Yeah. So you close on that acquisition, you start building. Do you start bringing install work into the West Palm area at that point, or when did you start doing a little install work, if you end up doing any?
Yeah, I mean, I would say, we really vamped up more enhancement type work in West Palm. We were really never big on the new construction install. Uh, I like everything to be recurring. I like to go to bed
Yeah.
knowing what's going to be there tomorrow. Not the one time, hits. Like, yeah, winning $1 million install is great, but winning $1 million maintenance account is way better.
Totally.
Lower margin, but I'm still way happier. So we actually kind of turned the knob back on the new install in Naples, because it wasn't long term. It's you always need the designer selling, you always need people selling that work to keep the funnel going. And uh, so we actually tried to scale back on the install. We actually saw our margins increase, which I think
Interesting.
just showed, right? Like the install business is great margins when you're busy. And then, they end up doing some work at lower margins because they need to stay busy at times. So, I think when you blend it, it's probably closer to the maintenance type margins at the end of the day. I think almost every business is similar, but, we actually saw margins increase when we toned back on the install.
Well, interesting. So, and I would agree with that. Especially if you take a profitability average over 2 or 3 years with the install, because you could have like a really good year, and then maybe not so good of a year. And when you average those out, I definitely agree. You're going to find your margins a lot closer to the maintenance work than
Yeah.
maybe that high quarter or high month you had in construction.
Yeah.
So you're going through this, you're getting to be a nice size, and I'm sure with your you've been in the conference scene, you've been in the magazines, you're getting a lot of press. How often are you getting hit up for people trying to buy your business at this point? Once you hit that kind of like, 70, 100 employees, once you make that acquisition, what's the how many calls are you getting on a regular basis?
Yeah, I mean, I think there was quite a bit of calls, honestly, for probably the last 5 years. Like, I think, I had a good social media presence. Like, people saw what I did. We showed off the trucks, but, people didn't really know how big we were. So they were always calling because they just figured, okay, well, you must be the real deal if, you post a couple pictures of, if you have 3 or 4 Isuzu landscape trucks, you all of a sudden look like a, commercial landscape company, and these PE guys don't really know what they're looking at. So you look like a big company, and so they were calling for a long time, and I talked to quite a bit of them. Got lunch with them, wanted to know what they were looking for. They always said, hey, we want 50% maintenance. We want, more enhancement sales. We don't really like install. And, ever since like having lunch and talking to them, I was able to build the company around what they wanted, and it was never built to sell it. Like, honestly, like all along, I was just building it to grow a big, grow a company and the team. And, as we were getting bigger, I wanted to move people up. And the only way to promote people is to grow the company. So, I was
Yeah.
always just, but you always want to have an asset that you can sell, right? Like, you don't put a pool in your backyard to bring the value of your house down, or, even not to improve value, I guess, So it's like everything you do, every investment in your company should be, growing the enterprise value at the end of the day.
How much of those, I totally agree. How much of those private equity meetings, the meeting with the finance people, helped you understand really how to grow us and ultimately sell a business in the landscape industry?
I think learning the metrics that they look at, and then integrating some of those metrics and KPIs into what we looked at, like
Yeah.
EBITDA, like if you didn't know they were out there buying, I don't think any of us would look at it. We'd
No.
look at a P&L and look at the net profit. Like we don't care about EBITDA, because when you're operating, it really doesn't, it's not cash in your pocket. So, it's not a physical, item. Um, but learning those metrics and then looking at them. So that's really what I learned from them.
Yeah. EBITDA is a weird one. I think it's something that we focus on a lot here, but not necessarily because it's a great operating metric. Because in a business that has so much capital expenditures like landscaping, adding your depreciation back doesn't make a ton of sense because that's a real cost. But it's the measuring stick the industry uses, the PE industry. So it's a metric that I think all landscapers have come to know a lot better over the last 5 years.
Yeah, I agree.
So when you guys finally, decided, hey, I'm gonna market the business, I'm gonna transact the business, what was the tipping point for you when you decided to make the move?
Yeah, I mean, I don't think, right? Like, I loved what we were doing. I think we were growing a big company, but right, finding good leadership was really difficult
Yeah.
in terms of the next level, right? We had really good branch leadership, but getting to the senior level people to actually grow the company like it's theirs, right? And um, like I don't know what made me pull the trigger on it, but it was like, hey, what else is out there? And I didn't have any plans. It was like, hey, I think that, with this partner we can actually grow the company. The employees will have a lot more opportunity right now, and there's no plans for me to go anywhere, and I can focus on what I like doing, looking at businesses. I can help them grow it, do some acquisitions and, you know, tinker around with helping other landscapers. Like I love helping people, just like I did with my employees or team members. Like that's what's fun to me.
I can see it, man. I see you at all the Leanscaper events. You always have like a huddle of people around you asking you a dozen or so questions. How have those questions changed now that you sold your business? Like the last event we were in Florida, I guess, yeah, we were
Yep.
in your neck of the woods. Was it a different conversation during that event than prior events, what people were asking you?
Yeah, I would say, everybody's question is what's next.
Right.
And I'm somebody that doesn't really run with a schedule because I like being free. Like tomorrow, I don't think there's much on my schedule. Like I don't really book anything out. That's why like it was very hard to get this on the schedule because your calendar's like 2 months out and I don't go that far out. So
Yeah.
it's a little hard
That's
to get something on my calendar, but it's like, hey, can you do it tomorrow or the next day? Because I know I'll be free at that time. But um yeah, it's just, those events, like everybody asks why I sold, and there's no right or wrong reason. I don't think there's any right time, It's like I don't, it's hard to say.
it is. It's I talk to a lot of founders who have sold businesses, and it's not like this one day you wake up, you're like, oh, I'm going to sell the business today. It's just kind of a thing that happens from what I see. But one thing that's interesting is the difference of your routine after selling. So tell me a little bit about that. Tell me a little bit about what your day looks like today versus a year ago. What's the Austyn world look like today?
Yeah, I mean, right? Like it's funny because the team members are still like family, the customers are still like family. So I still love seeing them. Day to day now, I more or less, you know, help the people we had help them continue to run the operation smoothly. We've got a newly promoted GM, which was my old irrigation manager. So obviously, that was just one promotion that's already happened, an opportunity created that who knows if it would have happened if it was still lucky.
Yeah,
So helping that transition and, ideally probably like, I get out of day-to-day operations, which I'm starting to phase out of. And, I'm helping the landscape workshop team with some acquisitions and as they grow, uh, integration efforts and, from the bird's eye view of like what I see they should change different, right? Like everybody's learning and nobody's perfect, and they'll tell it to you as well of like every deal is different, there's no playbook that's going to work everywhere.
totally. And your perspective is valuable for them, I think. And the team over at Landscape Workshop, I've gotten to know JT pretty well over the years, and they seem to run an incredible operation. I mean, they're known for kind of being one of the best in terms of integrating new companies into their system, into their culture. Tell us a little bit about that integration process as much as you can. I don't want you to give away any secret sauce here, but what, how'd that look? What are some of the things that you're like, man, they really nailed that maybe others can learn from?
Yeah, I mean, I think, right, one thing that Landscape Workshop's very confident in is hey, we're going to rebrand it. We're going to be one name, one culture, and we're not changing that. It doesn't really matter, what you think, but they tell everybody going into it. So there's no surprises. They don't show up and say, hey, we're changing the name. Like, going into it, hey, there's going to be one name. And I completely agree with it because we tried running two different names in Naples and, it's like next thing you know, you want to move, assets from one to the other and you got to relogo them and it's a lot of work. So, they just get it off their shoulder on day one. They basically, hey, the hardest thing for me was telling the employees and it was like, okay, that's over. And it's like, oh, now I got to tell the customers. How do we do that? So
Right.
like those were the two hardest things, but hey, after week one, like that was done for, and rather than BSing the story of, hey, we teamed up or this and that, it's still going to be lucky. Like it's just, hey, look, we partnered with LW and we're we're rebranding as LW and that's what's going on. Your people, everything stays the same. Like emails, phone numbers, and the name on the truck will change, and that's it. Like operationally, everything else is the same. So, that was, I think, a great method of like, hey, just get it off everybody's shoulders. Let's let the customers know, let the employees know. And then they offered great support. Like they had, somebody from the landscape workshop team in our branch for the first 90 to 100 days every single day. So any
That's
questions
huge.
that came up, it's not like we were calling the corporate office of, hey, we need this or we need this login or we need a PO for this. Like we had somebody there to help with that integration, and helping with Aspire and just every question that came up, like somebody was here to help us. And I think all the employees just felt supported during that time.
That's huge. I mean, just that support from their team in person too makes such a big difference. And I've seen a lot of, we've seen the consolidation in the market. We've seen the LWs and the Yellowstones and the Heartland who are fully one brand. And then you've seen the Mariani Premier Group and the Sperber companies that are intentionally a family of brands. And, while there's obviously two clear paths on how you can do it, it seems like the one brand integration makes the most sense and provides that level of community and being together as one team. So I definitely commend Landscape Workshop for having that strategy and not leaving you like wondering for the first year or two if things are going to change. You knew it going in, and that gave you probably some level of confidence that this is the right move.
Yeah. Yeah, for sure. And, I think like at the end of the day, everybody knows, right? I think every Sperber customer knows that Sperber owns it. Like there's no more of the, hey, we think like it's still local or something, right? Like it's out there.
Yeah.
Every Mariani truck still has a different name, but still says Mariani on it, so, there's pros and cons to it both. But, for me, it was like, hey, if we want to move assets, like we've got to rebrand everything. And we were pretty extensive on the wraps on our trucks. So to me, it was
Yeah.
like, that was hard to do. So I was like, let's just make it one name, and we're all just a lucky employee.
Yeah. It makes sense. And you having that experience too probably helped going into this deal of knowing what it's like to buy a company. You at least have a little bit of idea what to expect going in. And so the question I have through this process is you've surrounded yourself with some really amazing mentors and people who've helped guide you. How important is it for you that you had mentors to go to and talk through some of these big decisions in your life over the last, really the last 5 to 10 years?
Yeah, I mean, having mentors, both in the industry and outside the industry, like was huge, right? Like on a bad day of, hey, what do I do? Or hey, this person quit, or you know, I really want this person on my team, but they want more money. Like, how can I bridge the gap? You know, was definitely huge. And then on the flip side, right? Like you also don't want too much input, right? Like I've been in that boat as well, where
Yep.
you have all these amazing consultants, great names, great people, they're all knowledgeable, but they all have a different opinion about how you should do it. And it's counterproductive at that point because you'll never make a decision. And I've been in that boat to where, you've just got to settle down, kind of pick one, or make it project based even. Maybe it's
Yeah.
operations, you're going to ask this guy, and finance, you're going to ask this person. So I think that's like going back, like it is true having too much input, especially from people that are consultants that you trust.
Yeah. I've been in that boat too, where you're trying to make a decision between two things and the two mentors you've asked gave you completely different advice. And now you're
Yeah.
left for like, well, I guess I'm back in the same boat, and then, yeah, and then you end up making no decision oftentimes because
Yeah.
you don't want to upset either one of them. And so you pivot. So, all right. So, dude, congratulations on all this success, by the way. I mean, and how old are you today, Austyn?
23.
23. Damn, man, that's impressive. I think a lot of people are going to be listening to this being impressed. So you're 23, you've had an amazing exit. You're helping them integrate the business, and you've got a new logo on your shirt. Tell me a little bit about this new startup that you're creating right now.
Yeah. So I kind of had an idea of let's get into a new industry that's, I wouldn't say too diluted. Definitely a lot of competitors out there, but, let's try a new business that I don't want to run it either. I want to build a team around it, but how can we focus on generating revenue, let the operations fall into place and run it off of metrics and have an equity pool for every employee? And so that's what, I was like, what can we do? And, obviously like recurring revenue, et cetera. And I decided, hey, let's try getting into the porta potty business. So, that's what we're doing. So Lucky Portables is the new name. And, for the most part, I'm onboarding new team members, and they know what the KPIs are. And now it's going to be like, how can we really grow the business just metric based, right? Like landscaping, I built it as an operator. Like I knew way too much about landscaping than I probably should have. So now how can I grow a porta potty business without hopefully knowing much about it, and letting the employees run it, because at the end of the day, it's for them. So that's kind of what the idea came from, and try to keep it simple, hopefully.
Wow. Well, I love how you're starting this business. So tell me a little bit more about the idea that maybe you knew too much about landscaping and that maybe hurt you a little bit.
I mean, I just knew way too much about the equipment and stuff that really is just mind trash. Like, doesn't really matter. Like,
Yeah.
obviously efficiencies are important, but that's for your operations guy. If you get a really good operations manager and you hold them to, productivity rates and idle time and KPIs like that, like you don't need to know that stuff, and you can focus on more visionary and strategy items. And that's where I'm hoping, like with the porta potty and built, business, it's more or less of I maybe have 3 or 4 direct reports, and then, I'm managing them to KPIs, and that's about it. And it's not that I want it to be a hands-off business, because it's really just an equity pool for employees to build this thing. And once again, battle against some of the larger publicly backed companies, of companies that don't take care of their employees is ultimately why somebody would come and work with us.
Yeah, it's so random. It's a space I actually know pretty well because I was in a peer group with my buddy Jared for 3 years. He just left, but he had a porta potty business, and it's the total like David versus Goliath kind of situation where you're battling the big, United of the world, and they have, millions of porta potties and treat everybody like crap. And no pun intended, but it's a super interesting world. So tell me a little bit more about this equity pool that you're thinking, or that you've created. So it's more of an employee, wealth creation for the business versus just a founder-led startup.
Yeah, so we're really trying to figure out the details of it, but essentially, like, this business is going to be owned by the employees. I've made my money. Like, I don't necessarily need to make money off of it, but it's like, how can we make an impact? And how can, if we ever have a liquidity event, and hey, maybe this is a thing that we build, we bring in a PE partner and we build it to the next level. Like, we become the platform, so, which then there's tons of opportunity for them as well, and the ideas are endless, right? But ultimately, some sort of like equity is only great if there's a liquidity event. Profit sharing can be done as well, but I think a lot of employees actually want there to be a liquidity event, so they can take some chips off the table as well. And so, but I want every single person, all the way down to our drivers, to have a piece of it, and a great profit sharing plan. Obviously, we're probably not going to be profitable for 2 or 3 years, but we're going to really build a good culture and a good team that everybody knows why we're here.
I love this. So what's interesting is so many employees are afraid of a liquidity event. They're so afraid of their founder selling because they have no benefit in that liquidity event. Nothing happens other than maybe their job is less secure, or maybe they have an opportunity for a promotion. But for the most part, they're not participating. But how you're building this is you're going to have every single team person, every team member on the company will have a stake basically in there being a liquidity event, which means everybody's building the company to sell or just transact, right? Like, I think private equity is such a great tool to bring on to create some liquidity, but also help free up some capital to go and do a buy and build, or just provide that strategic insight on how to get to the next level.
Yeah. I mean, right. Like, it doesn't matter how big of a company you are. There's going to be people that are capped at their positions, and you have to grow or you have to merge. Like, it could be a VP of finance, and, there could be a CFO, and it's like, well, how do you both grow? Well, maybe you need to have, a PE partner so you can do acquisitions, and then there's more opportunity, so like, it doesn't matter how big you are. You could be $100 million company and people still are in capped positions, till you get to a $200 million company.
Yeah, growth at all levels becomes mandatory if you want to have those opportunities for promotion. So you did you do anything when you sold the company? Did you like go on a big trip or buy a boat or anything fun?
I didn't do anything until I finally made a bad investment buying a boat, but everything's for sale. So, we've already listed it and had a couple weeks of fun and figured, hey, if somebody buys it, they buy it. I'll get back to work. I don't need to spend my weekends on the boat anyways. I'd rather be working. So
it's a nice boat. I saw it on Instagram and I was like, oh, good for him, man. I hope you enjoy that.
I bought a fishing boat and I don't even know how to fish. So,
that's where friends come in. You just find friends that know how to fish and take them
exactly.
That's what I do. I like go on my buddy Josh and like, dude, I have no idea how to do anything. He's like, here, let me get your pole rigged up, and then you're the one catching the fish, and they're just back there tying hooks all day. So
yep. And then I catch the fish and like move the pole over to them so they can take the fish off the hook.
Yeah. How do I get this thing in the boat?
Yep.
It's good, man. Right on. So, are you headed to Leanscaper in Chicago?
Yes, I'll be there. I don't know if I can break the streak now of not showing up because I've been to every single one. So I'll be there.
Yeah, I'll be there too. I kind of feel the same way ever since I was at the second or third event, and then I haven't missed one yet. But I think
Yeah.
maybe that's part of Mark's strategy. He gets us hooked on these events.
Yep, you can't miss one.
You can't, man. Well, I'm excited to see you grow, Austyn, see you build Lucky Portables and what that turns into. And also your continued influence in the industry has been super impressive. And I think our industry is definitely much better having you in it, your story, your success. It gives a lot of people, especially a lot of younger guys, motivation and inspiration. So thank you for everything you're doing. And I always like to end every podcast asking our guests for a trade secret. I didn't prepare because I hit you up like on Friday for this thing, but what would you say is your like trade secret, your thing you go to, a saying, a quote, something you live by in business?
Hire people better than you. That's what I always try to hire people better than me, and it's funny because as we grow the porta potty business, I told everybody now, like, hey, you're coming in, but eventually you're going to need to find somebody that's better than you that can take your spot if you want to grow. If you don't train your replacement, you're going to be stuck where you're at.
100%. Level 5 leadership right there.
Yeah.
All right, man. Well, thanks for coming on today. Appreciate it. I'll see you in Chicago.
Awesome. Thank you.
Thanks for tuning in to Trades Talk, where the next generation of disruptors comes to raise the bar. If you got value from today's episode, share it with someone in the trades who's ready to level up. For more tools, insights, and community, follow host Justin White and join the movement at jwhitegroup.com.